This week, $7 billion of cash from AT&T will be received by EchoStar. But EchoStar's stock fell another 10% since I last covered it. And here's what makes that even stranger. It still holds $9 billion of airwaves it has not sold. Verizon once tried to buy just one block of this for $10 billion. On top of that, there is the SpaceX stake. 261 million shares worth roughly $43 billion today. The market is treating all of it as if it does not exist. So the CEO is about to have the cash to buy his own company at half price, directly benefiting the shareholders. If you are new here, quick version. EchoStar sold its airwaves to Elon for 261 million SpaceX shares. The deal fully closes in November 2027. I covered that in my last video, link in the description. But today is about what has moved since then. EchoStar has had a $2 billion share buying program sitting authorized for months. The problem was they never had the money to actually use it. You do not buy back your own shares when you are sitting on $24 billion of debt. That changes this week. When the AT&T cash lands, the debt gets paid. What is left is roughly $7 billion in clean cash. The stock is currently trading at roughly half of what the assets are worth. A $2 billion buyback at half the real value does not just cut the share count. Every share the CEO buys below asset value makes the remaining shares worth more. Think of it like Daniel's Burger Shop. The shop is worth $1 million, but today, people are selling slices of it for a total of $500,000. So, the owner steps in and buys back some of those slices at a cheap price. He paid 50 cents for something worth $1. The people who still hold a piece of the shop now owns a bigger share of the $1 million business. That is what a buyback at below fair value does for you as a shareholder. The buyback was always authorized. He just never had the cash. Now he does. But before we go further, there is a number inside this deal that almost nobody put in the math. $2.4 billion of those proceeds are frozen. Here is what happened. Years ago, EchoStar promised the government it would build a nationwide 5G network. It hired tower companies, it signed contracts with vendors. Then it stopped building and sold the spectrum instead. The vendors said, "You owe us." Their claims added up to between $7 billion and $10 billion. The FCC said, "Fine, you can sell. But put $2.4 billion in a locked account first. That money sits there until a court decides who gets it." So, of the $7 billion arriving this week, $2.4 billion is already off the table before the CEO touches a dollar. If the CEO wins the legal argument, the $2.4 billion comes back. His argument: the FCC itself pressured him to sell the spectrum. So the vendors cannot blame him when he was the one being pushed out. If the vendors win, that $2.4 billion is gone. Their total claims were between $7 billion and $10 billion. The escrow only covers $2.4 billion of it. There is not a reason to walk away from this story. It is a number you need in your calculation. In June, one event drove sellers into EchoStar and restarted the same old fear. Here is what the data shows. On June 1st, EchoStar skipped a $183 million interest payment. Investors read it as a sign the company was cracking again. But here is what most people missed. When SpaceX signed the spectrum deal in September 2025, it did not just agree to pay with shares. It also committed to cover roughly $2 billion of EchoStar's interest payments through November 2027. Think of it like a backstop. SpaceX guarantees the payments while the deal is still open. So on June 1st, when EchoStar skipped the $183 million payment, it was not because the company was running short. It was a tactical choice. The AT&T cash was days away. EchoStar chose to hold its current cash for a few more weeks and wait for the bigger pile to arrive first. The SpaceX backstop meant it had time to do exactly that. On June 18, EchoStar paid the $183 million interest in full. Within the grace period, no default. What looked like a crack was the deal structure working exactly as planned. The market saw smoke, there was no fire, and the stock fell anyway. In my last video, I told you 3 things to watch. The first one was short interest. Short sellers are people betting the stock goes down. They borrow shares and sell them, hoping to buy them back cheaper later. If the stock moves against them, they have to buy back at a higher price. At its peak, about 36% of EchoStar's publicly traded shares were borrowed and sold short. As of early June, that number had dropped to about 25%. Why does that number matter? Because every one of those short sellers has to buy shares back eventually. If the AT&T cash lands and the CEO announces a buyback, those people are suddenly on the wrong side of 2 catalysts at once. Their forced buying does not replace the fundamental thesis, it adds on top of it. The more shorts still in position when catalyst hits, the more fuel enters the market. Signal number 1 from the last video is moving. The shorts are starting to cover, but more than half are in position. Quick one before we go further. Do you think the CEO announces a buyback this week, or does he wait? Tell me below. And if the breakdown is useful, give it a like so it reaches the next person watching this stock. Here is the number I keep coming back to. In my last video, the SpaceX stake was worth about $35 billion. That was at the IPO price of $135 per share. SpaceX has moved since then. 261 million shares at today's price work out to roughly $43 billion. The SpaceX stake grew $8 billion since my last video. The stock fell $11. When you watch every signal confirm and the price still moves the wrong way, you start asking, what am I missing? And then there is the asset I mentioned in the beginning, the one almost nobody is putting in their math. EchoStar sold $40 billion of spectrum, but it still holds a separate block of airwaves called AWS-3 that it has not touched. Verizon once sat in negotiation to buy just one block of EchoStar's remaining spectrum. The price on the table was between $9 to $10 billion. Right now, the FCC is running a live auction for similar spectrum. The Congressional Budget Office estimated it would raise $3.3 billion. Independent analysts put the range at $3 to $4.5 billion. The company is targeting 2028 to sell it. Not this week, but real. And almost nobody is adding it to the stock price today. $43 billion SpaceX stake, $7 billion in net cash arriving this week, $9 billion of remaining spectrum. You are looking at roughly $59 million in identifier assets. The whole company trades for about $30 billion right now. I have covered EchoStar twice. Each time the math gets wider and the market stays still, I land on the same question. If this gap is visible to anyone who does the math, who is reading it differently and what do they know? 3 things to watch. 1. The AT&T court order. When the judge signs off, EchoStar gets the cash. That is days away, not months. Watch for the filing. 2. Whether the CEO announces a buyback. He now has the cash. If he uses it at this price, then it's the first real mechanism to start closing the gap. 3. The $2.4 billion escrow. Watch for any court filings or settlement announcements. That money is either coming back to EchoStar or leaving for good. It is one of the biggest single swings in this whole story. If you have not seen the first EchoStar video, watch that before you decide anything. It covers the full setup, the Volkswagen comparison, the Yahoo warning, and the exact reason this gap exists. That is the foundation this whole story is built on. This is a time-sensitive trade and the window is closing. Click here to watch it now.